Hello traders, Gary Wagner here, approximately 1:30 in Honolulu, 6:30 in New York. It is Tuesday, November 24th, 2020, and this is the Daily Report for Gold and Silver. The selling mayhem continues in both gold and silver, with silver taking the greatest percentage drawdown when compared to silver. However, both moved into bearish territory, and in fact, we saw gold touch upon and trade below the 200-day moving average. It's currently trading just above it. So we'll have to see if this area holds. That's going to be the primary focus of today's technical studies. But first, to the price board. As I'm sure you are aware of, gold has sustained another sharp drawdown, this time breaking below on an intraday basis the 200-day moving average, and currently is trading just above it. The 200-day moving average is currently fixed at 1799. That's important because 1800, that century mark, is also a key psychological level. So whether or not the market holds the 200-day moving average is critical in determining where we can expect gold to go from here. Currently, we have December futures fixed at 1805.60, a net decline of $32.20 or 1.75%. When we look at spot gold, that's trading at 1807, so a couple dollars above futures pricing. Silver also sustained a drawdown, but interestingly enough, it was gold that had the largest percentage drawdown today. Silver lost 1.5% as opposed to 1.75% in gold, currently at 23.85 cents, and that was all in conjunction with strong tailwinds from a dollar that's down about 0.4% at 92.11, which means that if it was not for dollar weakness today, the damage would have been much worse. On a day like today, when gold is trading under so much pressure, typically that would be the first chart that we look at. However, I've chosen to pull up a weekly dollar candlestick chart because even with dollar weakness recently, we have seen gold move to lower pricing. This is a weekly chart, and as you can see, from July through current pricing, we were close to touching this key level, the 23% retracement, at 91.59. In fact, the last time we were here was April of 2018. Prior to that was this drop in January of 2018, and then again here, August of 2013. So we have seen this price point not be significant in terms of showing us defined support or resistance level. Simply put, it went right through it here. It went right through it here during a rally, but here we are absolutely seeing some sort of consolidation, but whether or not that holds is yet another subject. But it's something we need to be aware of, because if the dollar does gain strength and gold is still under pressure, that could add fuel to the fire. But even with dollar weakness, it is clear that gold is trading under severe pressure. If you recall, yesterday we broke below what I believe to be a key level, which was the 38.2% retracement right here, and it closed just under it. It opened below it, and what's interesting today is the low comes in within dollars of this 200-day moving average. And of course, the way traders view a 200-day moving average is to give you an extremely long-term view of market sentiment. If it breaks below it, that means long-term market sentiment has flipped to the bearish side. One positive note that we could possibly see some support come in at the 200-day moving average is to look at the intraday low. I had to thicken the wicks themselves so you could see it better. But today's low in gold came in at 1797.10, and 1799 is the current fixed price for the 200-day moving average. So we will have to see if we get follow through selling or some sort of support coming in this area. One of the more interesting ways to illustrate dollar weakness along with gold weakness and the effect that it has had is simply by viewing these line charts with gold on the top and the dollar on the bottom. If we take a look at the area that I'm circling with this white square, what we can easily say is that both have been under pressure and they have both been trading to lower prices in tandem. That is a correlation that we typically do not see between gold and the dollar. We are currently looking at a daily candlestick chart of silver. If you recall from yesterday's show, I said that what we might see is because of the industrial component in silver, we might see that fare better than gold in terms of the percentage drawdowns if the market continues to drop. The market hit a low today at the 38% Fibonacci retracement, but look at the distance between current lows and the 200-day moving average. It clearly illustrates that silver has been holding up much better in terms of recent price gains and holding on to those gains than gold. And traders, lastly, do want to take a look at the U.S. equities markets, this through the eyes of the Dow Jones Industrial Average, which for the first time in history broke and closed above 30,046 to be exact. You can see the straight horizontal line that we have added, and this simply represents the former all-time record high. There is no doubt we have seen equities moving to higher grounds and doing so in a robust and substantial way. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review as we get ready to celebrate Thanksgiving on Thursday here in the United States. Have a great day. We'll talk to you tomorrow. Bye-bye.